So, what are the three misconceptions that I've encountered recently in conversations with active and passive investors? Before I dive into those, just a quick reminder that my videos are for educational and entertainment purposes only and do not constitute tax, legal, or investment advice. So, number one is social media presence, meaning a lot of investors taking that as the primary level or indicator of credibility and experience of a potential operator, fund manager, or lead sponsor. While social media is important, especially in today's day and age, and that is how a lot of people first connect with and find operators and sponsors and eventually get on their communication channels, that is not the sole source that you should rely on as an investor. Following that sponsor for a while, getting an in-person, or if you're too far apart, virtual connection over Zoom or another video media, following them for a while to understand how they think, what their investment philosophy and investment criteria are, is extremely important. And last but not least, talking to other partners or passive or active that they have worked with. Misconception number two is that high risk equals high return. Sure, yes, as an investor, you get paid to take on risk, and if you take on more risk, you should be compensated for it accordingly. But what people often fail to recognize is that high risk also equals higher probability for loss. So it's imperative that you understand that, and in that scenario, really understand what those risk factors are, how or if they can be mitigated, and then make a decision whether or not you are comfortable with proceeding based on fully understanding those risks and comparing that to the level of projected or expected compensation. And just a side note that I did a full 10-part series on understanding the 10 key risks in multifamily underwriting, so you can find those in this channel. And misconception number three that nicely ties into number two, actually, when it comes to returns, there are no guaranteed returns, especially when it comes to the preferred return. I find that often investors think or are under the impression that it is guaranteed. And while the preferred return does rank higher in priority in terms of payment, it does not mean that it is guaranteed. If the deal completely flops, guess what? Even though that return is accrued, it will not be paid. So be aware of the word guaranteed returns when it comes to investments, any investment really, and I will personally run for the hills when I hear that. So I hope you found today's video helpful, and if you did, please like, share, and subscribe, and I'll see you at the next one.